Tesla is looking for its next big win, and the company is focusing on self driving cars as a key part of its long term strategy. Robotaxis from the electric vehicle giant were supposed to be widely used by now. Elon Musk has repeatedly promised the public that fully autonomous vehicles were just around the corner. But the deployment of self driving technology has taken longer than expected. And Musk's broken promises, along with Tesla's recent struggles in the EV market, have left investors questioning if they should take the car maker's autonomous vision at face value or put their cash elsewhere. On this Growth Story Spotlight, we take a look at Tesla's upcoming Robotaxi event, why the company is centering its growth strategy around a technology it's had trouble executing, and how the investing community might react. Elon Musk and co. are slated to unveil, well, something about a future robotaxi model at a company event this fall. Here's IBD News editor Ed Carson.
All we know is that Elon Musk has teased that there was going to be some kind of robotaxi event. The speculation, some of which may be informed speculation, is that there will be some robotaxi prototype will be unveiled.
Along with the potential prototype and app, analysts are also expecting to hear more about Musk's plans for Tesla's robotaxi rollout. And while the company aims to produce cheaper vehicles with more robust profit margins, it's doubtful Tesla will see any substantial financial gain from robotaxis anytime soon. RBC Capital analyst Tom Narayan told the Wall Street Journal that robotaxis are likely years away from mass market adoption. And in a June 11th note to investors, JP Morgan analyst Ryan Brinkman said, "We do not expect material revenue generation likely for years to come." But while meaningful robotaxi revenue seems years away, Tesla bulls like Wedbush analyst Dan Ives say the event will be an important moment for the EV maker and ultimately the key to Tesla reaching a $1 trillion valuation. And Musk is feeling the pressure to deliver after Tesla postponed its highly anticipated event about 2 months to give its teams time to build more prototypes. Though the delay has shaken some investors, Ives remained optimistic. In a July 11th note, he wrote, "We believe the timing of robotaxis, partnerships, and the ultimate autonomous and AI-driven technology does not change at all for our bullish Tesla thesis." But a crucial component to make this chapter of the Tesla story work is full self-driving capabilities. And the development of that technology has been a major hurdle for Musk and Tesla to overcome.
It's something that Elon Musk has always talked about, now, well, at least talked about for the past decade.
And this is not hyperbole. Over the last decade, Musk has made a lot of promises about robotaxis and Tesla's self-driving software.
A Tesla car next year will probably be 90% capable of autopilot. So 90% of your miles could be on auto. November or December of this year, we should be able to go all the way from a parking lot in California to a parking lot in New York. No controls touched at any point during the entire journey. I feel very confident predicting autonomous robotaxis for Tesla next year. The trend is very clearly towards full self-driving, towards full autonomy. And, I hesitate to say this, but I think we'll do it this year.
At Tesla's 2019 Autonomy Day, Musk promised there would be 1 million Tesla robotaxis on the road by 2020. He even boldly predicted that Tesla owners could generate about $30,000 in passive income each year if they use their cars as robotaxis.
So buying a Model 3 is a good deal.
The Autonomy Day event was largely viewed as a failure by analysts and the media, as Musk made many promises at a time when Tesla was having major operational and financial troubles. Now, to be fair, Musk wasn't the only person hawking a vision of robotaxis on the roads. Uber and Lyft had self-driving initiatives as early as 2016, and in 2017, General Motors said mass production of fully autonomous vehicles would happen by 2019. Many experts kept proclaiming the self-driving future was just months away. But that date keeps getting pushed back because autonomous driving technology has been harder to perfect than expected. Some companies have opted to build their platforms using LiDAR, which is more accurate and also more expensive. Tesla has gone a different route.
Tesla relies on cameras only. That's a relatively cheap option to do it.
Choosing to work with camera sensors has advantages. They can be more cost-effective and have better visual recognition of objects closer to the car. But it's also a trickier technology to make work, and there's not really a lot of room for error when it comes to vehicle safety. Other self-driving competitors like Google's Waymo use LiDAR, which has lasers to create three-dimensional shapes, as a centerpiece of its sensor technology, while Amazon's Zoox has a combination of the two in its self-driving vehicles. Waymo is currently the dominant robotaxi service in the US with about 700 vehicles in its autonomous fleet. The company is looking to partner with China's Zeekr to scale operations. While Waymo has an early lead in the market, ARK Invest analyst Tasha Keeney says that Tesla has one advantage that Waymo doesn't: data. Tesla has roughly 6 million cars on the road and is already generating 66 times the driving data of Waymo and its other competitors. That data not only helps train and improve the EV maker's self-driving platform, but could also generate significant revenue when Tesla decides to license its full self-driving software. And the company is making more investments in autonomous technology.
And until recently, they really weren't spending much on the back end. They finally started spending money on NVIDIA chips and so on to spend money there. Whereas others will use multi-sensor arrays. They'll use vision and they'll use radar and LiDAR. Not all of them using all of that, but those are usually multi-sensor. But they're expensive. That's more expensive. And like maintaining that, you have to make sure that everything's calibrated. Even though the costs are coming down, and they are, it's still expensive.
If Tesla can get cameras right, it would be a huge competitive advantage for the automaker.
If you could do that, you could generate perhaps a huge amount of revenue because there's not that much money made in cars. Tesla made some for a time, but it's like, long run, it's a relatively low margin business. The stocks have relatively low values generally. And so this is something, not just the growth driver, but it's something that keeps that growth story alive for Tesla stock.
But some experts say full self-driving will never happen with a vision-only system, and that figuring out the technological obstacles could take years. Consumers might also be wary of Tesla's rumored robotaxi design, which features no steering wheel or foot pedals, and therefore no way to manually take control of the car in case something goes wrong. Amazon's Zoox delivery vehicle also has the same layout. So why does Musk continue to lean into the autonomy story for Tesla, despite the challenges and unkept promises on self-driving technology?
EV sales are struggling, even with some big price cuts. And so that's hit profitability, it's hit sales. They might come out with something that's more like a variant of the Model 3 or Model Y that's a little cheaper, but not really that exciting. And so you look at that from an EV business and you go, car with lower sales, lower profits, lower prices, and not much of a pipeline, that's not really that exciting. Robots are a lot more interesting than saying we're going to sell a few more cars.
Carson adds that for Elon Musk and Tesla, pitching a robotaxi fleet to investors not only just sounds cooler, but justifies the company's high market valuation.
Robotaxis and robotics and AI, that's exciting. That's the future. I mean, there's a reason why Tesla's value is as high as it is. Its valuation is extremely high for an automaker. When Elon Musk says this is a $25 trillion opportunity in robots, well, maybe it won't pay off, but if you think that it can, that's why it can still be worth, $500 billion now.
Tesla not only has technological road bumps to deal with, but must also navigate changing regulations that govern self-driving cars. The company is moving closer to launching its full self-driving technology in China after striking a deal with Beijing-based Baidu to use their mapping software in its vehicles. But Tesla faces stiffer scrutiny in the US as federal regulators, including the Department of Justice, investigate the company over its self-driving claims following a series of crashes using the Tesla Autopilot system. So how much of Elon Musk's robotaxi vision should investors and the markets take seriously? Here's IBD's Ed Carson again on how the robotaxi event could impact Tesla's stock.
From the robotaxi perspective, bulls are probably going to be excited. Bears are going to say it's like whatever, same old, same old. So I don't know on that front if it's really going to be that much of a mover. I think there's just a big, massive dichotomy in terms of what bulls and bears think the company should be valued. I mean, bears might think, hey, this should be valued like 50 billion. And the bulls are saying 5-10 trillion kind of thing. I mean, that's an insane disparity. You don't see that even with other tech companies. The advantage for Tesla, if they can make it work, is that it's very cheap. And so they don't have to necessarily be first. That's why bulls are so enthusiastic, even though there are other vehicles that are already on the road that are robotaxis in some limited areas. So that's the strategy. It's a high risk, high reward kind of thing for Tesla.